Hello and a very good morning, traders and investors. Welcome back to the channel. I am here with your daily dose of pre-market analysis for the October 30th Nifty 50. In the next 15 minutes, we will break down the key technical levels from yesterday's price action, identify the crucial support and resistance zones for today, and formulate a clear trading plan. Our goal is to be prepared, not surprise. So, grab your notepads, and let's get straight into the charts. Yojak Chinh. Section 1. Why Wednesday's recap or market context. First, let's quickly recap where we ended yesterday. The Nifty 50 closed at 26,068.30, posting a modest gain of about 118 points, a 0.45%. This indicates a positive, but cautious, sentiment. Looking at the chart, we can see that the index managed to close above the 26,000 psychological mark, which is a bullish sign in the short term. However, the real story is told by the key levels we have ahead of us. The immediate battle lines are drawn, and our job this morning is to identify where the next big move might come from. Let's deep dive into resistance levels. Now, let's talk about the hurdles the bulls need to cross the resistance levels. According to the data, the immediate resistance starts right from the opening bell. Our first key level to watch is R1 at 26,112. A sustained move above this could trigger a push towards R2 at 26,170. But the real challenge for the bulls lies in the cluster between R3 at 26,228 and R4 at 26,286. If the market is genuinely strong today, breaking and holding above this zone could open the doors for a test of the higher resistances at R5:26, 344 and the formidable R6 at 26,402. I want you to pay special attention to 26,400. A decisive break above this level, with strong volume, could signal a potential rally towards the larger swing highs we see on the chart around 26,600 and 26,700. Now deep dive into support levels. On the flip side, let's map out the safety nets and danger zones, the support levels. The most critical support for today is the 26,000 mark. But more precisely, our first line of defense for the bulls is S1 at 25,959. A break below this could lead to a slide towards S2 at 25,859. If selling pressure intensifies, we must watch S3 at 25,769. A breakdown here would not be a good sign and could push the index lower into the S4:25, 674 and S5:25, 574 zones. The ultimate major support to watch on the downside, as per our data, is S6 at 25,516. A break below this level would likely indicate a significant shift in sentiment and could lead to a deeper correction. Remember, the key is to see how the price behaves at these levels. Does it bounce, or does it break? Now, trading plan or strategy for the day. So, how do we trade this? Let's build a simple plan. For the bulls, entry trigger, look for a strong opening above 26,112, R1, and then a consolidation or pullback that holds as support. Targets, your first target would be 26,228, R3, then 26,344, R5. Be cautious around the 26,400 to 26,450 zone. Stop loss. A strict stop loss should be placed below 25,959, S1, or even below 26,000 for a tighter risk. For the bears, entry trigger, watch for a failed attempt to cross 26,112, R1, or a breakdown below the 25,959, S1, support level. Targets. Initial target would be 25,859, S2, followed by 25,769, S3. Stop loss. A stop loss should be placed above 26,170, R2, for short positions. Overall market sentiment, the close above 26,000 gives a slight edge to the bulls, but the path is filled with resistance. The key is to be patient and wait for the price to commit to a direction. Don't chase the market. Wait for it to come to your predefined levels. Finally, coming to conclusion or disclaimer, to sum it up, traders, the Nifty is at a critical juncture. The zone between 25,950 and 26,200 is likely to be our battleground for the day. Keep a close watch on the banking and its stocks as they will be key drivers. A very important disclaimer: this is purely educational content and not a trading recommendation. The markets are volatile, and you should always do your own research and consult with a certified financial advisor before taking any trades. Manage your risk carefully. If you found this analysis helpful, please give this video a thumbs up, subscribe to the channel, and hit that bell icon so you don't miss our daily updates. What are your key levels for the day? Let me know in the comments below. Until next time, trade safe, and I'll see you in the next one.